And joining me on today's call, I'm super excited to have Matthew Thompson and Daniel Calgary. Our topic today is going to be literally understanding the three keys to unlocking value in your business, especially in a tough economy and more so without working any harder. So Matthew Thompson, who comes from a company called Virtual CFO Australia, and Daniel Calgary, who comes from a company that's, you're going to have to remind me, Daniel.
Expert Business. Yeah.
Thank you. Expert Business, who specializes in helping people value their businesses. We're going to be talking about how do you improve the value of your business, because it's one of those things that most people don't think too hard about. They spend most of their time thinking about sales and cash flow and getting more leads in the door. But it's only when they come to sell that they actually start thinking about, well, how much is my business actually worth? So let's talk a bit about this topic today, guys. So it's three keys to unlocking value in your business. Maybe I'll start with you, Matthew, on my left. When it comes to unlocking value in a business, what do you see as the elements that people are ignoring and they should be paying more attention to?
Yeah, David, I think there's traps that we as specialists in the SME sector often see with the way owner-operators run their business. So if you want to, get an objective, solid valuation to your business because you're interested in selling, first and foremost, there's got to be integrity in your numbers. So numbers that are accurate, prepared with accounting best practices. We're not talking here about tax compliance. You can be tax compliant without there being a lot of value and quality that can be drawn from your numbers. Yeah. And even if your numbers are compliant, some of the other pitfalls that we see is that there are a lack of arm's length engagements in a lot of small businesses where a relative is a supplier or a customer. And these things don't necessarily transfer well in a world where this business would go into other people's hands. A lot of times our SMEs are caught short without any reliable projections and foresights. They have a profitable business, but they don't really understand why. And that's kind of something that's very, very important if you want to try and have an investor take an interest in the future prospects of your business. And then I think probably the one that we see the most that is the real key for me is we often come across business owners that have got no boundaries between themselves and their business. So they are having personal expenses being paid for by the business. They have got their personal cash flow affairs and their business cash flow affairs all mixed up. They're not drawing an objective wage. These are all big red flags for anybody who'd be interested in buying a business. So run a business objectively in a way that it would be easily transferable to a new owner, and get yourself set up in that way from day one to avoid these headaches down the track is my sort of short advice on this topic for anybody who might one day be interested in selling and doesn't want to change too much of what they're doing on a day-to-day basis right now.
Yeah, awesome. And Daniel, like obviously you're in that world where you are actually a business broker. So you're looking at the businesses coming up for sale all the time. What are the traps that people fall into when they're looking to improve value of their business?
Yeah, sure, David. So yeah, look, I do operate a business valuations practice and also a brokerage. So we're actually selling these businesses on a day-to-day basis and have been doing so for the last 10 years. But also we do have are in contact with a lot of clients that want to value their business, not necessarily to sell, to maybe build some value into it, and maybe make some strategic decisions off the back of that. So the things that we see is similar to what Matthew was saying. They relate to replacing the owner out of the business.
Yeah.
Okay, because the owner's going to go out of the business, and if you don't replace the owner out of the business or put some measures in place, some systems, some team members in place to be able to extrapolate the owner out, what's going to have to happen is the owner's probably going to have to stay in the business for a period of time after they transact the business for a year or two. So replacing the owner out of the business and getting ahead of the curve on that is a really big one. And there's a real it's challenging to do that, but also it takes a bit of work to be able to and planning in place to be able to do that, not just when they're ready to sell, right at the end. Also the financial records, cleaning up financial records. Time and time again, we come across businesses that are probably running all their personal expenses through the books, and the business doesn't look profitable as it could be, and that's not going to truly translate well to an acquirer looking at it, but also their advisors as well. So we generally get if it has been a mess in the past, starting to clean that up and making sure we can present records when it comes time to sell. That's probably the major one, because a lot of businesses are being sold through people are sitting behind their computers. They're basically sitting in their accountant's office and going through the numbers and the figures before they even come out to view the business. So if you're not in that the ballpark, you won't even get an inspection. You won't even. It'll just go. There's so many businesses people are actually looking at. So you need to be prepared and make sure that you're making sure that you can present that to an acquirer when the time comes.
Yeah, awesome. Thank you. I mean, look, from my perspective, I see a lot of people going to business for all the right reasons. They have great ideas and aspirations and dreams, and then they get railroaded into becoming self-employed. And I think the biggest trap in Australia is that self-employed people and people who run businesses are seen as the same. The distinction being a self-employed person is really a person with an ABN number that collects tax for the government for free, but they're working time for money. Now, if I'm self-employed, the value of my business is the number of hours I can contribute. And I think when it comes to valuing a business that's basically a self-employed person, it's a job. Okay. And I think a lot of people don't want to look at that. They don't want to see it. They see valuing their business as a future thing. And from what I'm hearing from both of you today, it should be something that should be assessed and determined right at the start. So before anyone thinks of selling their business, they should be thinking of valuing their business so they understand what the actual asset value is, and starting to move things away. Because Matthew, you touched on this idea of everyone puts all their expenses through the business, right? And from a tax perspective, it makes a lot of sense. Okay. But as soon as we start looking at selling the business, all of a sudden it's a very murky area, and it really doesn't give us a clear picture of how much the business is worth. So I guess when people start business, they don't think of this up front. And from what you guys are saying, they probably should, right? I remember Michael Gerber said it one day really well. He said, if you can't sell your business, you bought it. Which means if no one's willing to pay the price, you're the bunny. And you're sort of stuck with this business that may have zero value, but it might be a good job. Now, I don't mind that. I don't think there's anything wrong with it. But the problem is, if you think you're going to sell it in the future, you might as well start planning for that. And you might start thinking about things a bit differently and making sure you've got something that's reportable. So let's talk about this idea of unlocking value in it's a tough economy right now for most business owners. Some people are thriving, but the majority are feeling the pinch of the inflation and so forth. What are the keys? What are the things they should be doing straight away? What should people in business be doing regardless of what the economic cycle tells them?
Sure. I guess like back what you were saying about having an ABN and having a job versus having a business, which is a business is a system. Okay. So really, systematizing the processes in their business is a really important one, because that's what people are buying. They're buying, and that's transferable. Okay. So making sure that that value that you've created is transferable value, not just value that stays with the owner. I think that's a really key for making sure that it's transferable, but you're building these systems in place into your business.
Sure. Yeah. Matthew, anything that you'd sort of add on that people should be looking at straight away from when they start?
Yeah, a lot of the advice that we're giving to our clients on an almost daily basis kind of is underlined by a few ideas. The first one is managing risk. Everybody in general in this environment is quite risk averse. So be careful who you give credit to. Be careful the kinds of deals that you undertake. If something sounds too good to be true, it probably is. Understanding true performance. I think one of the simplest questions that we as virtual CFOs are able to answer our clients is, so how am I really doing? And as a business owner, knowing how you're really doing, it gives you that gap of, well, how much more do I need to improve, and where can I improve? And I think the last one is probably a little bit counterintuitive, but prioritize cash over profits. So lower margin deals that you have peace of mind that you will definitely get paid, and that your business will show a positive cash flow from operations is far more attractive to a business that looks profitable on paper but has got no cash. And in the world of valuations and investors, people are looking for entities that are generating substantial cash flow from operations. So these are metrics that I think you need to become comfortable with as an SME owner. You need to understand them. And so working with reliable advisors, service providers such as ourselves, can give you that insight to really understand, well, this is where I started. That's where my value was. These are the steps that we put in place to try and improve our value and really target improving these metrics And this is the progress that we've made to date. So that's that readiness recipe that we like to try and teach our customers.
Yeah, fantastic. And from you, Daniel, I know there's formulas that people can use to do a Ready Reckoner valuation of their business. And it's usually a combination of profit and multiple. Do you want to just give us a bit of insight into this?
Yeah, so look, on a high level, there's two ways you can increase the value of your business or build value into your business. Number one, you can increase the bottom line, the profitability of the business. Okay, so that's one lever, but also the other lever is increasing the multiple. Every industry has, an industry rule of thumb, like a multiple that will be applied, but each individual business has a multiple based on the risk factor. Okay, so if the risk factor is higher, the multiple is lower. If the risk factor is lower, it's a higher multiple. So for example, like having recurring revenue and contract revenue, that's going to be like forward bookings, or could be 3 years of a supply contract that transfers over, and that's not risky income. And the cash flows are a little bit more secure. So that's going to trade at a high and sell at a premium, and be valued at a higher multiple, for example.
Yeah, right. And I suppose linking back to what Matthew was saying, we try to minimize profitability for tax purposes. So if we use our financials that we submit to the government to try and sell a business, it's going to look like it's making very little profit.
Yeah.
And I guess that makes sense from a tax point of view, but certainly not from a valuation point of view. So do we need to keep two sets of books? Is that what we're sort of alluding to here?
Yeah, look, I guess, yes, record keeping is very important. And, you've got your management accounts, and then you've got your accountant prepared financials, which is, the aim of having an accountant is for tax minimization. Is essentially what you're paying for. When you're valuing your business and you're looking at selling a business, an acquirer is going to undo all that the accountant wants to work out how much the business is actually making, what are they going to take over, and what's actually there. So yeah, looking at having really clearly discernible books, which you can say, okay, these the add backs that we can add back. We'll be able to verify them as well, so we don't have a long list which is questionable. So you could actually explain that to an acquirer and their advisor. Their accountant is going to be probably sitting behind a desk looking at these add backs and saying, okay, well, these are these are verifiable. And if you can be verified, well, you just get over that section in the financial due diligence, and you can get to an offer and a sale a lot quicker.
Okay.
If I can just add, David, perhaps not two sets of books, but what we like to use the phrasing in the industry is management accounts, right? So accounts prepared for the purpose of measuring the true performance of the business, where we will back out some of the entries that are done for the purposes of tax and stuff like that to give that indication of true performance. I think the one thing that I find SME owners get a bit bogged down in, and that they really need to keep in the front of their minds, is that if you're ever selling your business, you're selling the future prospects of your company only. The investor doesn't give a damn about history. So make sure that you're in an industry that has positive growth prospects and has potential and is relevant today, because a business that was great 10 years ago could be a very bad investment today because of how technology and things evolve and so on. So legislation, regulatory environments, all these kinds of things can play a big part. The more solid your awareness is of these kinds of things and what people look for, the better chance you have of achieving the kind of valuation and exit from all of your hard work that you could want to get.
I think what you touched on there is something that's dear to my heart, which is the leadership component, because I think not only does the business become more valuable when you have a clear direction and there's a future, it also helps attracting high caliber employees.
Yep.
Also, it sort of helps with customers who are looking to make decisions. They look for the stability into the future, because, even now I'm looking at cars, and some of the companies are offering 10-year warranties on cars. And it sounds incredible, but then you think, are they still going to support this in 9 years' time? Or is it something that they're just putting out as a promise? So there's a level of, I want to make sure that what they're promising is able to be delivered. But I think in the SME space, a lot of people don't know how long they're going to survive. And you touched on it, Daniel, because there's two assets I always see in a business. Number one is the systems, and number two is the stability of the current client base. So you touched on contracts. So I guess part of unlocking the value of a business is thinking about long-term stability and mitigating risk. And that comes in two ways. One, I guess, is making sure clients are stable and there's recurring revenue or recurring engagement, number one. And I guess number two is to make sure that the business owner is not in the core or the center of the activity of the business, which means if they disappear for 3 or 4 weeks, the business can continue to run. What's your thoughts on this idea?
Yeah, that's a good point, David. I mean, look, if your business can be under management, operate under management, yes, it's more valuable. Okay, so and when you have the business operating under management, the acquirer is going to make a judgment call on the management, okay, and the leadership, and okay, how strong is that? And that's going to be determined if they were going to acquire the business or not. And they will meet with management. So having them things in place is very, very important, because when you can look good on paper, you can have everything, the financials in order, and you can be profitable. But the human element is very important, because you're going to probably work in the business for a period of 6 months to 12 months, and you'll afterwards in a training and handover. And you've got to be able to have to work with that person as well. So that's a really big factor when an acquirer comes and looking at a business. They might be looking at 4 or 5 different deals, which are very, very similar, okay, in profitability and return on investment metrics. But the one thing that actually gets it over the line is and why they choose that business is the management and the person who they're buying it off.
Yeah, fantastic. So, Matthew, were you going to pop
Yeah,
in?
this can be a trap for business owners. What we often find is they themselves have invested their own money. They've leveraged their properties for security. They're quite literally invested in the success of their company.
Yeah.
And as such, what you find is what I call the implied owner's burden. So because they've taken on this big investment, because they have basically gone all in on themselves in this business, there is a intuitive reluctance to rely on others to get the job done. There is a desire to, and I don't think it's intentional. It's just because they're under so much pressure to succeed. They micromanage everything. They smother the team around them. Any people with aspirations, talent, that could be a big contributor to that company come and go. And basically the rubbish is all that's left behind, because they don't have the aspirations to grow beyond working for this individual. So when they get to the point where they want to sell the business, there's actually nothing behind the owner when you peel back the layers, right?
Yeah.
And the sooner the owner understands that the only way that they can release themselves from being this business is to build a team, and that is the value that can be unlocked over time, the better. And we have clients that fall in both camps. I've got some that I see have got the owner's burden, and I don't see them getting away from it as much as I want to try and advise them that this is a problem. And I see others that get it, and it's rewarding to see that they get it, and they're willing to trust and invest and empower others. And that really is critical to their success.
Yeah, it's super interesting you say that, because I do think a lot of people go into business because they're good at what they do. And then they spend years telling everyone they're the best at what they do. And then when they run out of capacity and they need help, they go, no one does it as well as I do. So how can I possibly employ someone? So there's an old saying, what got you here won't get you there. And I think that situation you just described is almost like a self-fulfilling prophecy. So if I build a business based on how good I am, then transitioning it to how good everyone else is an ego battle at best. And I think you're right. If people think about it from the point of view, imagine if everyone in business wasn't allowed to have skills in that business. They were just allowed to have business management and leadership skills. It would change the world. But the reality is most people are technical. They're really good at what they do, and that's why they run a business. So they start as self-employed. And then as they scale, they end up with a team, but it's more like a life support system than it is a distributed team. And that's what you just alluded to there. So look, I guess there's 2 things. One is that we're going to do a deep dive in this in our presentation that's coming up shortly. But if we were going to wrap up today's conversation with 1 or 2 takeaways for people to be thinking about or actioning as a result of understanding how to unlock the value in your business, where would you go? What would you suggest, Matthew?
I think, first of all, understand your business's real performance from day one. So set yourself up to go, how is this business really performing? And number 2, start with the end in mind. In other words, whatever the reason is, whatever the finish line you have in your mind when you start your business, whatever that dream is, set yourself up and surround yourself with good advisors, because as SMEs, it's a very lonely journey.
Mm.
And so having people that have walked this road and helped other SME owners realize their dreams, it's a no-brainer to partner up with them as soon as you can.
Yeah, fantastic. And from you, Daniel?
Yeah, so business owners, I mean, if they just start thinking about transferability, okay, like the value in their business, ask themselves the question, is that transferable value, like, or is it gonna all fall, to pieces when they walk away? Okay, because that's what they've got to start thinking of and then start implementing. But also, do you have a job or a system? Okay, so and that's because a job, everyone's got a job. Okay, they're not going to give up their job to go buy another one. Okay, they buy a business and a system. Okay, so do you have a transferable system in place that you might be able to exit because that's saleable and or that's transferable?
Yeah, fantastic. What's ironic about this conversation is that as we talk about it, and I think, often people, when we start talking about increasing value to sell, what we're doing is creating a better business anyway. And often when people go down this path, they choose not to sell because all of a sudden it's not difficult anymore. They're actually working on it, not in it. So I think, when people say, well, I don't think I want to sell my business, my suggestion based on today's conversation is that doesn't make any difference. The value of your business is determined by how much of a burden it is to actually run it as the owner. So whether you keep it or sell it, that valuation still tells you how much it depends on you. And I think if people take on that sort of idea, and I think the other thing I'd suggest from what you suggested, Daniel, is get a valuation done because it's a reality check, right? And for a lot of people, when they see it, they go, oh, I thought it was worth way more than that. And then you go, well, I'm just telling you, this is the maths. This is how it works out. And I think going back to what you said, Matthew, the numbers don't lie. And I think often people say, I don't know my numbers. I don't want to see my numbers. That's my account. And I go, you know something? That's like saying, I'm not going to speed even though I can't see my Speedo. And it's just crazy, right? So I think this whole idea of unlocking value, it should be done by every single business owner. It should be a reality check that shows them how their business is actually tracking and also where they need to make the adjustments. So for me, it's literally, you've got to start with an end in mind, as Matthew suggested. I think you've got to get a valuation done so you know what the reality is right now. And also determine if you are going to sell it, how much for and when, and so that we can start putting a plan together to get people there. So it sounds like it's going to be a great deep dive. When we get into this presentation, which is in a few weeks' time, we're going to be talking a lot more about these specific elements. Because I think when we do have a tough economy, it makes people think about, how much is my business worth? Where can I cut my costs? How can I improve profitability? How can I create stability? And I think we're going to answer a lot of those questions in the presentation. So any last comments before we wrap this presentation up, this conversation?
No, just looking forward to doing a bit deeper dive in a few weeks. And we're looking forward to it.
Yeah, this is who we're here to help, man. So the more people that have the common interest of the SME owner in mind and trying to help them fulfill their dreams, we should be very grateful, I think, for what the SME sector does for the economy, the risks that they take, what they do. So it's always good to be a part of a solution and adding value and making constructive suggestions for business owners. That's who we're here to help. Looking forward to it.
Yeah, fantastic. Thank you very much, guys.
All right, thanks, David.